Mike Tedeschi, Portfolio Manager at Perspective Wealth Planning, with this week's market breakdown video. We're going to take a look at the four major U.S. indexes. We've got some very interesting key levels that we're paying attention to today. We'll jump in and take a look at the U.S. dollar, commodities. We're also going to check out bonds as well, as they are at a key level also. Let's jump right into it here. S&P 500, just a phenomenal rally here over the last couple of weeks, straight up off the bottom. We held that important key 4,100 level and made that bounce. Now, what we've been able to accomplish is we've gotten back up over that 4,600 level, and that was the resistance that was in play from the end of January, and we're now above it. So if we're looking at this market, we now have a mixed bag. We're not quite trending, and here's what I mean by that. We have a high, a lower high, a lower high, right, and the lower low and the lower low. We had a downtrend here. But now that we've put this high in, we have negated that. And so what we actually have is we have a high, a lower high, a lower high, and now we've got this higher high. We have the lower low, and now we have a higher low. We actually have a potential upward moving channel inside still the context of a downtrend that has been in play since the beginning of the year, making this a mixed bag. If we take the all-time high out, then this whole thing has been negated, and we will have a series of higher highs and higher lows on the bigger time frame as well. What is perfectly normal to see happen here would be a back test of the important level that we broke out from in the beginning portion of this rally. Put in a higher low here, so you would have a higher low right here, and then take it and put another higher high in, and that would really confirm that we are in a good uptrend. Now, this is what happened back actually in 2020, so I wanted to pull this back up. Now, this is a much deeper correction, and it took a lot longer to play out, but you can see we got a bounce, almost made a new high, right? The new high is here, and we got to right here. Then we pulled back. And where did we pull back to? We pulled back to this important zone, which is where we broke out from in the second portion of the rally. So we pulled back, and then we continued on, right? So that is something that certainly could happen here. Bulls really don't want to see this dip really below that 4,600, right? Because the best and strongest possible case that you have is just we continue to grind higher and take out that high. That would be the most bullish scenario. But this certainly completely has changed the structure of the market when we take this 4,600 out. Because if we didn't take that 4,600 out, then what you ultimately have, right, if we stopped about right here, you'd still have lower highs in play, and that would still have that downtrend in play. So the action that we saw here over the last couple of sessions, getting above that 4,600, was huge from a technical standpoint. Let's take a look at all of the indexes with this in mind. First, let's take a look in at the Dow Jones. Now, what do we have here? We have not taken out this high zone right here. This is that 35,800 to 36,000 level. So you can see we still are making potentially lower highs in on the Dow. So the Dow needs that next push to take this zone out to have the same comments apply that we had on the S&P 500. The NASDAQ has taken that zone out, took it out, but wasn't able to hold over it for more than a session, right? So this is what we're really watching here. So here is that zone, and we did break above it. So we did technically make a higher high, but we fell right back down into this zone. We need to see 5,200 close. I'd love to see it close above that on a weekly basis. That would make the weekly chart look a lot better there as well. The big concern, and what we're going to spend the most amount of time talking about, is the Russell. All right, because the Russell 2000 had the break, and I'm going to clean all this out, and we're going to go through this very clearly. We had the break over the key 2100 level, which has been the important zone here for the last year, right? This is really what it's looked like. We have traded in this range. We had the false breakout, then ultimately we came down to the breakdown here. And these are 200-point ranges, basically. 1900, 2100, 2100, 23-ish and some change. Now, we got that breakout very cleanly over that zone on some good volume actually. And the next day we gave it all back. So the Russell yesterday had a big down day after that huge move higher. It was down back below that 2100 level. This to me is the biggest key, is can we get and hold over 2100? The reason is because this, number one, is one of the most clean charts out there in terms of the ranges. Like if you're back in this upper box, that opens that run up higher. And two, we always talk about the mid caps being an important risk gauge, right? When the mid caps are doing well, that means money is going into riskier assets. And typically when money is going into riskier assets, it bodes well for everything as a whole. When everything is piled into safe havens and not going into risk assets, that shows a more defensive nature. And that really has been kind of what we have seen so far this year. Utility stocks are breaking out to new highs, very defensive area of the market. Healthcare stocks are pushing close to breaking out to new highs, another defensive area of the market. And we're not seeing growth and tech leading us the way we have in the past. So we really want to see that leadership come back into play. And that's why we're paying very close attention to what happens here. So this week's close on the Russell 2000 to me is really, really important. Can we close over 2100 and get back into this top box? If we do, I think we are going to go and continue to have that positive momentum to the upside. If we don't and we fall back below this zone, that would be another potential false breakout that happens here in the Russell. False breakouts typically can have swift moves in the opposite direction. All right, and so that's something we always pay very close attention to when we're right at those levels. Now, speaking of potential false breakout, let's take a look in at bonds. This would actually be potentially a false breakdown. Everybody is talking about rates rising and therefore the bonds falling, right? Bonds are down over 20% from the high from last year. They're in bear market territory, which I believe is the first time that's happened in 3 decades, right? There's not a lot of reasoning behind wanting to own bonds in this market environment. And so everybody is on one side of the ship. And when everybody has the same exact thought process, that is when we can see moves in the opposite direction. Now, we drew out this level on bonds. This is really, really important, this 146 level, because it goes all the way back to the important price action zones in 15 and 16, 2017. We get another important zone in 2019, right? So when we look at this chart, we could see a reason why you might find a potential bottom. I'm not saying the bottom, a bottom. And for the last couple of days, bonds have rallied, even in the fact that they are absolutely hated at this point in time. Now, they haven't undone anything, right? That major breakdown zone was in there, right in here at this 150 zone. So all this is a little weak bounce. But if it continues to head higher here, you could be looking at a position or a potential occurrence here where everybody thought bonds were just going to continue to collapse, and it surprises the entire market. So this is a really important level to watch. And if you get back up over that 150, this could be that potential false breakdown. And like I just said, from the potential false breakout, you can get swift moves in the opposite directions. This would certainly surprise the most amount of people to see bonds make a bounce here. So we're going to pay very close attention to that. Now, the US dollar, man, it really tried to get up over that 99.5 zone, was unable to do it, pulled all the way back down. If we look at the price action here over the last month, it is a very clear tight range, up, down, up, down, up, down. Markets found equilibrium between like 98 and 99.5. Where that next move plays out is going to be really, really important. We get the dollar to break down back into this zone. We can fall back into this box down here. That could give commodities once again a tailwind. If we break out here, that could end up being that headwind for commodities. Bottom line, whoever wins this battleground, it is important, so we're going to continue to pay attention to it. Now, gold has had a couple of interesting sessions here over the last couple of weeks that I really wanted to dive in and point out to you guys. We had that big rally into the fears of World War III. That was kind of abated. We fell back to an important level, and the big psychological level, that 1900 zone. And I've got the line on the chart right here because that's where we failed in the middle of last year. 1900 and 1960 is really, really important. Again, we've talked about these levels in depth. What's very interesting from a price action standpoint is the behavior that we saw on this day and the behavior that we saw on this day. Both times gold went way down during the day underneath that 1900 level and immediately came back up. That is a swift and clean rejection of that 1900 zone. That is a good sign for the bulls, because every time we came back to that level, there was a lot of buyers ready to pick up right at that point in time, and we've bounced back up. If gold can continue to follow through and get over that 1960 zone, really like the way this market looks. And with these two big reversals off of 1900 intraday, it bodes a little more credence to the potential for us to get that move higher here. It's got to prove it to us still, but that is an interesting occurrence that we've seen play out here over the last couple of sessions. Silver did the same thing. Silver fell all the way to 24 and then came back up and closed basically back at 2500, or 25, I should say. That's that key level on silver that we've been watching, right? We want to see this back up over 27. These charts don't look nearly as good as they did a couple of weeks ago, but the big rejections on these sell-offs certainly feels like there is some support and still some demand underneath of the surface. Palladium, very clear on this. It fell all the way to that breakout spot from January 17th. Right, and I mean, this thing went from 2,000 to 3,500, came all the way back down to 2,000. Then there's that big bounce, right? This chart still has a ton to prove. This has been a wild ride in this space for quite some time. But that, again, is a good sign. If this holds as a low, you do have higher lows put in. And on the long time frame chart, you still have higher highs put in. That is an uptrend, even though it is a wild one with big price swings. Now, platinum does not look nearly as good. It did get a reversal, the same as the rest of the space. And if we put this level on the chart, which we certainly can because that was that breakout from January 17th, right, we can see why this level is important to hold. But this really has not performed nearly as well as one would have expected, given some of the other moves and other metals in the space. Got to hold 960, right? Really want it back up over 1100 if you like this space for the long term. Copper has held up really well. It can't close over that 480 zone. We tried yesterday to get up over that zone, fell back down. Right? That's that level that's really, really important because those are the highs from last year. Above 480, copper looks great. Below 480, it is suspect. 450 is that major support zone. So in between 450 and 480, it's kind of a trendless, ranging market where really nobody is in control. So those are really the two key levels to watch. It's certainly pushing up on the ceiling. And remember, the more times something tests the support or resistance zone, the more likely that it eventually will break. So this still continues that grind higher as we have seen and still looks pretty good. If you can get that break over 480, not only is that a good thing for copper, but copper is always kind of that indicator of building and economic growth because it's used in a lot of buildings. And so a move up on copper does continue to look well for the overall economy. Now, last area I want to talk about would be the crypto market. We'll take a look in at Bitcoin. Bitcoin finally got up over that 45,000 level, right? We have pushed into this next zone. 52,000 is the next important key zone. But when we look at this from a technical standpoint, we held last year's lows. We actually put in a series of higher lows. We have continued to put higher lows in really since the beginning of January here, right? We had that nice flat top where we clearly tested it and failed once. We failed twice. The third time we broke out. We're making a nice little flag. See if you can get that follow through to the upside. Things get really interesting over 52,000. Bulls really want to see that 45, 46,000 level hold because a move back underneath of it wouldn't be good because then you would have this as your high and this would be a lower high and that would still be a downtrend with higher lows put in. That would be a non-trending rangy market here like we've been in for the last few months. So this was an interesting development that we certainly wanted to point out this week. We could also look in at Ethereum as well. Very similar looking chart. 3,300 is that same zone. Failed a bunch of times. Finally broke out towards the upside. Still has a lot to prove here. There's a lot of overhead resistance from what happened last year, but this is certainly a constructive occurrence that we're seeing. As always, I hope you guys find this content useful. If you've got any questions, feel free to reach out to me at mtedeschi@perspectivewealthplanning.com. You can give me a call at 814-580-9881. Love to talk to you anything regarding the markets. You guys have yourselves a fantastic week. I'll see you next week.